Hello everybody. So today I'm making a quick video. I'm kind of upset at YouTube. Over the past few days, there's videos I make that took me, like my Tesla video, took me well over 5 hours to make, and my video yesterday on Bitcoin took me quite a while to make. It was almost a 40-minute video with lots of thoughts, and it's like I lose subscribers. Like I lost 10 subscribers yesterday because I covered Bitcoin. I'm like, really? I'm only trying to speak with my heart and what I believe to be true, and it's like YouTube is pushing. Anyways, it's a phase. I don't know what's going on with YouTube right now, but that's why I'm making such a short video, because I know these videos, I also often get very critical comments, but that's okay. So let me just show you really quickly this video. This is my evaluation. Right now for my top 10 stocks. There has been a few changes. One change that you'll notice is that Palantir is gone. Palantir is gone because Palantir went into Tesla and went into Enphase, and Palantir is now not in the top 10. It's actually not even in the top 20. I will likely, I'm done selling Palantir in a way. Now there's other stocks that I'm looking to sell. But the point is, Tesla and Enphase are still dirt cheap. Part of the debate, of course, recently on Tesla is, what's going to be the forward growth on Tesla. I decided to put 37% to update that down in my spreadsheet, because that's my calculation that I ended up with based on the capacity, the manufacturing capacity that they've highlighted in Q3, right? Last week in Q3, they highlighted that capacity. The highlighted capacity, assuming that they use it fully, that would give us only 37% revenue growth. And I'm still assuming that the prices won't change much from where they are today. And I just want to note that last week, one of their more minor models, I believe it was a Model S, or was it Model X? I think it was Model X or S. They increased prices, right? Let's not forget that Tesla increases prices, but that doesn't get advertised. Whenever they increase prices, that doesn't get advertised. And there's also other things that they do, like those wraps, right? That's another thing that, $7,000 or $8,000 on a wrap, that's gonna be pure margin. This is the other type of stuff that doesn't get advertised. And it also seems that the Cybertruck, which, keep in mind, the Cybertruck will be mostly sold through 2024. From the rumors that I see, it seems like it's going to be much more expensive than the $69,000 that they had announced, 3 or 4 years ago 4 years ago when they did the launch. So the Cybertruck might surprise to the upside. The price of a Cybertruck might surprise to the upside. So, and then you have Tesla Energy, Tesla Insurance. Don't forget that Tesla is becoming a utility in more and more states, right? They're gonna get more utility states rather than just Australia and Texas. Tesla is already a utility in Texas, but there's going to be Tesla Utility Electric, where you have deregulated utilities. You have a lot of things going for this company. You have the compute, the AI. 37% revenue growth, I really believe that's conservative. But this is one of the things that I'm going to have to change this spreadsheet, because, of course, I had to review down my Enphase expectations for growth for next year. And really the question for all of these is next 12 months really the right way to look at growth? And obviously it's not. Obviously it's not the right way to look at growth. It is the habitual. It is the easy way to look at growth, because stocks is an industry that is based on next 12 months estimate. And so that's just the standard. That's what people do. People study stocks year by year. But is that the first principle correct way to study stocks? No, it's not. It's just something dumb that we all do because the finance industry has been doing this forever. But year is clearly not the right time frame to look at innovation. Actually, the right time frame to look at innovation is 10 to 15 years. Disruptions happen in 10 to 15 years. So really, that growth number always should be in the thousands of percent, and it should be all about predicting in 10 to 15 years where the world's going to go and where it's going to be, and that's not easy to do. But I think this is where you can catch the most opportunities. And if you were to use revenue growth, say 10 years out revenue growth, if you were to use that number, my guess is that some stocks would look heavily discounted. Namely, my guess is that stocks like Tesla and Enphase, who have very bright futures going into the 2030s, very bright in my view, these stocks would probably be heavily undervalued, right? And if I were to look at other stocks, like a stock like StoneCo, for example, whose future is great, small payments in Brazil, that's a big country, and that's great. But that future is not even close to what a future of a company like Tesla or Enphase is. And just by the fact, for example, that like a company like StoneCo, for example, or HIMS even, they're national level companies, right? StoneCo is Brazil, 250 million people. HIMS is the US, 340 plus million people. Like, just by this very nature, you're going to be limited in your growth. And Tesla and Enphase, of course, these are international companies. You don't have that limit. So I want to take with a grain of salt. I've always taken 30% revenue growth, but I want to take that with a grain of salt. So anyways, Tesla is dirt cheap. It has not bounced back yet. I think it will bounce back, but who knows? If it doesn't, I'll buy more, and I keep buying Tesla. I've been buying Tesla and Enphase, hand over fist lately. Enphase is dropping in sympathy with SolarEdge because everybody is fearful about what the quarter Thursday night is going to look like when they report, and this is why we're having a bargain. But as you may have seen in my video on Sunday, in my view, they're going to get more subsidies than the current enterprise value of the stock, which is $12.4 billion today. I foresee them getting more subsidies than just that. So the present value of the subsidies alone is worth the market cap of that stock, in my view, in the way I look at it. And if you look at the math of my Sunday video, it's really simple assumptions, really, really back of the napkin math, and I'm probably missing a lot. And so, this IRA bill, and by the way, Tesla, I could do a similar calculation for Tesla and battery manufacturing in the USA for Tesla cars. This IRA bill is going to end up being one of the most expensive pieces of legislation to the taxpayer, and I anticipate this maybe being a debate in the late 2020s, early 2030. Why is this costing so much money? Because people will realize back then that it costs a lot of money. Let's talk about Bitcoin. Nobody cares about Bitcoin, from what I saw from my video. It's very annoying because this is a channel beat the denominator, and sometimes talking about sound money is a good idea. Bitcoin is a very unique idea. Storing money in your head is a very unique idea. I'm used to people not agreeing with me on Bitcoin, but is that a reason for massive dislikes on the video? Is that a reason to just I get good unsubscribe? It's like unsubscribe. That's but it's like I feel like the time I spent making this video yesterday was a total waste of time. So Bitcoin is likely going to go away from that spreadsheet, and I don't think I'm going to be covering Bitcoin anymore. It's just going to be the way it is. If this is the tribal world that we live in, if growth stocks investor cannot even listen to what the Bitcoin folks have to say, then I don't know what to say. It's like, you don't have to agree with me, but Bitcoin is a revolution. It is a very unique technology. It is a very, very unique technology, and all I can think of is, I can't remember this dumb economist. I think it was in the early 2000s who said I think it was Stiglitz. Was it Stiglitz? Something like that. Who said the internet will be no more meaningful than a tax machine. The internet will be no more meaningful than a tax machine. He said after the .com bubble. Right after the .com crash, like that's the kind of madness you can see, and I still feel like some people are feeling this way, even though we have BlackRock doing an ETF, BlackRock IBTC. Anyways, Probably the last time I talked about Bitcoin. Moving on. HIMS, talking about HIMS. HIMS has been very flat. HIMS has kind of been an anchor in my portfolio. Ever since HIMS has been around $6, it's not moving. It's like $6, 6.20, 6.10, 6.03. It's not really moving that much. HIMS is flat. Like, people are understanding that, dirt cheap at some point can't get cheaper than dirt. It is the price of dirt, So HIMS is like incredibly cheap. I cannot understand how cheap it is. It seems like a lot of a negative narrative on social media about, the marketing and the marketing cost and customer acquisition cost. This narrative has kind of been, quote unquote, shut up by some of the screenshots that we've seen from the Apple Store, where the app is now, was it number 4 or number 5 in health? Something like I think it was number 5. Like, it ended up being number 5 in the health category a few days ago. So clearly HIMS is doing something right. In my view. So I can't wait for HIMS for when they report this season, and I think it will be interesting. CrowdStrike. Let's talk about CrowdStrike. CrowdStrike has been a stellar performer. It's performing very well. It seems like cybersecurity is a priority that remains, and since CrowdStrike is the winner-take-most stock in the space, they are the quality stock because they have so much more data and because they are so much bigger than their second competitor, next in line competitor, which is Sentinel-1. And if you look at the performance year to date of both stocks, it's very, very, very striking. The delta, right? The delta that has you can literally see the stock performance of both stocks going in opposite ways. And CrowdStrike, we got a lot of good stuff from CrowdStrike, especially that long-term guidance that we got from the CEO. That long-term guidance is outstanding. Removes a lot of risk in my view. I love a CEO that is willing to give us long-term guidance like so many of these CEOs have. Tesla has, HIMS has, CrowdStrike has, SoFi has, well, indirectly, but they've told us we want to be top 10 by 2030, top 10 financial institution. This is an indirect guidance. I like when CEOs give us long-term guidance. It removes the risk. Moving on to Mercado Libre. Where am I at? No. Sorry. I'm right here. Moving on to, I forgot that I don't look like this month. Moving on to Mercado Libre. Mercado Libre is cheap again. Mercado Libre is a little cheap again. It's in the 1100s, trading in the 1100s. You may remember it had run up way past 1300 a share. It is cheap again. Mercado Libre is my most uneventful, as steady Eddie type of stock that you could ever find. In fact, I have a hard time thinking of a stock that is as uneventful and as little debated, little discussed, with so few bears, that also grows at 30% plus. It is very rare. If you can think of another stock that is predicted to grow at more than 30%, where there is such a consensus and where nobody has like a stronger version to, let me know, because sometimes it helps you sleep well at night. And I could really understand why some people could justify owning Mercado Libre, a much bigger position perhaps in Mercado Libre, just because of that sleep well at night aspect, because this is a very consensus stock in my view. Mercado Libre is not controversial. You'll find very few people who think it's a bad idea in the stock investing world. So stock is cheap again a little bit, but I mean, valuation has not changed that much compared to, say, Tesla. Yeah, right? Tesla took a nosedive. Enphase, let's not even talk about Enphase taking a nosedive, right? These took a nosedive, a la HIMS, almost like fairly similar to HIMS, which also I think is a major takeaway, right, of a stock like Tesla. Like when a stock like Tesla can drop this much, if you look at Tesla right now compared to 3 or 4 months ago, you're almost at a 30%. You're almost at a 30% delta between both. When a stock that's well over 500 billion can have 30% deltas, there's a lot to be said about small cap stocks. I know plenty of small cap stocks that are very little volatile. Like another one is StoneCo, right? StoneCo is not that volatile at all. StoneCo has been at $10 for the longest time. It's spiked at 13, but it's back at 10. But it won't stay at 10 forever, in my view. They're doing a buyback right now, right? They're cash piling. They're having great revenue growth. I love StoneCo very much. I think it's a stock that is still undiscovered and still dirt cheap. And of course, buying a growth stock because it's dirt cheap, that's not enough of a reason for me to buy the growth stock, right? I want to buy the growth stock not because it is dirt cheap. I want to buy it because there's growth. StoneCo has a bunch of growth, right? This is one of the reasons why I'm not interested in a stock like PayPal, because PayPal has no growth, or at least less than 15%, less than monetary inflation, right? Less than 15%. So it's pointless. If you buy a stock that has less than 15%, over the long term, you're drowning. I realize that some people invest short term and they invest for multiple adjustment play, right? Oh, the P is low. The P is going to get back to its long-term average. And so you buy when the P is low and you wait until the P gets back to its long-term average. But, it's a gamble. It's a bet because you don't know if this time is different. You don't know if this time is the time that the company will actually start underperforming consistently because of a flawed business model. So anyways, I move on to Nubank. What about Nubank? Nubank is, again, a little bit of a consensus stock. One of the things that I often see about Nubank, people complain about Nubank, is the valuation. People find Nubank highly valued, but as far as I'm concerned, my valuation, and I've calculated SoFi and Nubank multiple times. And by the way, Nubank is the new addition. I now put Nubank and SoFi because Palantir's gone of the top 10. So now I have Nubank and SoFi in the top 10. I'm always struggling as to which one I like the most between Nubank and SoFi. On the one hand, I think I understand SoFi much better because it's in the US. I actually have a little bit of a SoFi account on the side that I barely used, but I still have it. So SoFi, I see the ads, see the stadiums, all of that stuff. So living in the US, it's easy to understand SoFi. Nubank is harder to understand, but I definitely like the growth at Nubank much better. Yes, Nubank is more expensive, right? On enterprise value over gross profit, well, my calculations of gross profit, keep in mind these are financials. You can argue all day long on how you calculate gross profits on those, but that's my calculation of equivalent gross profit. Per that, Nubank is almost 3 times more expensive. It's almost 3 times more expensive, but the growth is so much more explosive at Nubank. So you're paying a premium, but you're paying for that growth, right? They have a lot of opportunities for growth. So I'm torn, and I think a lot of investors in these two stocks are also torn because they don't compete head to head, right? SoFi is leading in the US. Nubank is leading in Latin America. There's a few Nubank folks who say, "Oh, Nubank maybe is gonna cater to the Hispanic Latino community in the U.S. and try to do some business in the U.S." I don't know about that. But it's just the way it is. So I've discussed SoFi too here, and SoFi, of course, a lot of people on SoFi. On the one hand, they're bullish about student loans coming back, but I've been bearish on the student loans because if you look at the technicalities of student loans coming back, there's an election in 2024. That's point number one. And then point number two, the plan that has been put in place allows borrowers to be delinquent for up to 12 months without being reported, right? So technically, if you can't pay, you don't have to pay right now. The interest rates just accumulate, and you're delinquent, but you have 12 months without getting into trouble, right? They call it the Restart Initiative. And so I'm thinking, how many people are taking that bet, right? How many borrowers are taking that bet knowing that an election is coming? It's just the nature of the game. But personal loans, that's another area of concern where some people are concerned about personal loans or for SoFi, and will they have as many or not. SoFi is one of these heavily covered stocks on YouTube, and therefore I cover it less. But I'm still confident in this company, very much so. I believe whether it is SoFi or Nubank, these are companies that have 10x business models. They have orders of magnitude business model, and you find this in multiple aspects of how the business is done, right? How much better is it to deal with a modern app rather than dealing with an old credit card interface? A little bit of inside information. I have one of my credit cards is a Bank of America credit card. Like, I can't believe the code of Bank of America. Like, I can't believe it. Like, when I log in, it is the clunkiest. It seems like it's straight out of 2001 or 2002. It is the clunkiest thing. Chase is a little better, right? Chase credit cards, if you have Chase credit cards, you may know it's a little better. But I can't imagine what something like a Wells Fargo or a Bank of America or what about a regional bank? It's probably, it's so bad. It is not. It is night and day. It is night and day. The legacy IT is taking these banks back. These banks can't move forward because of this legacy IT. SoFi is smooth. This may not matter to your standard 50-year-old person, but this matters tremendously for digital natives. This matters tremendously if you're Gen Z. How easy is it to use the app? How good is the interface? And of course, the rewards, the product, the interests that you get, the FDIC insurance, it is between 5 and 10 times better, sometimes more than 10 times better. And what do we know about business in the 21st century? What do we know about all of these companies that I love so much, right? Whether it is Tesla or Enphase or even HIMS or CrowdStrike. What do we know? Or on Amazon, for example, or Mercado Libre. We know that when a product is 10 times better, what you get is something akin to a monopoly. What you get is an easy sell. It's very easy to sell a product when that product is 10 times or even 5 times better. Right? Old ways of doing business, 20th century, is switch to us because we are 15% better. Right? There's even a commercial, right? Geico, save 15% or more on car insurance. Right? 20th century business, your product 15% better. Tide laundry detergent. The Tide laundry detergent is 15% better than the competition. That's enough for you to gain market share in the 20th century. Today's businesses gain overwhelming market share, and they scale, and they scale very fast, and they become very big corporations. Why? Because the value offered is not 15% better. 15% better value is not enough to make you switch. Now, interest rate that's 10 times better, that's enough to make you switch. Right? As far as I'm concerned, I checked my bank. It's still 0%. Still 0% on the checking account. Right? Anyways. And the last one is Airbnb. And Airbnb is, of course, another platform. It's the winner take most platform in the house sharing, house renting, room renting, right? They are disrupting hotels, but much more than hotels. My view on Airbnb over the long run, 10 years out, is that they could disrupt mom and pop rentals, the mom and pop renter business. You have a spare house, you're a landlord, you have a spare house, and you rent that spare house. I think people are catching on that they need a layer of trust, and Airbnb is that layer of trust. And I'm curious to see, about how large Airbnb is going to get, keeping in mind that whether it is Airbnb or Tesla or Enphase, these are international companies. Airbnb is going to make a lot of money also in 2024. They have the Olympics in 2024, and they have a lot of other events that are going to make Airbnb very interesting. Airbnb, said it multiple times in other videos, but Airbnb is a stock that has amazing net profit margins, and so it's actually loved by both growth investors and value investors because it's got these great money margins, and it just cash piles business. Same is true for StoneCo, right? StoneCo is kind of the same thing out here. And I believe Enphase is moving in that direction. Enphase is moving in that direction as the money from the IRA is going to surprise. I think that money that we're going to get, direct pay, as Mandy says in the call, direct pay from U.S. Treasury. When they show in 2024 almost $500 million of a direct pay payment from U.S. Treasury, I think this is going to wake up a lot of shareholders to the opportunity. That's just my view. This is obviously not investment advice. This is just entertainment. And, you know, I hope you like it. I hope you like it, but this is not investment advice. I hope you like this video better than my yesterday video, given the feedback I got. So anyways, appreciate your likes, appreciate your subscribes. Thank you so much for watching. Have a great day.